The IRS and the Social Security Administration have just issued a joint emergency update for 2026 that is sending shockwaves through the senior community, and if you are currently receiving SSI, SSDI, or a VA pension, your monthly check is officially in the crosshairs of a major rule overhaul. We are talking about the full activation of the Social Security Fairness Act combined with the high-tech enforcement of the One Big Beautiful Bill, a duo that has rewritten the income thresholds for every pensioner in America. While the headlines are shouting about the 2.8% COLA increase, what they aren't telling you is that the new Medicare Part B premium surge is now being calculated using a real-time AI scanner that could wipe out your entire raise and then some before the money ever touches your account. But it gets even more urgent. Starting today, the government has officially deployed the AssetNet 2026 system, a digital bridge between the VA, the SSA, and your private bank records. This system is designed to hunt for unreported resources and countable income discrepancies that used to fly under the radar. If you have a small side hustle, a digital wallet, or even a joint account with a family member, the new 2026 verification rules mean that one single out-of-sync transaction could trigger an immediate automated benefit freeze that stops your checks for months while a shorthanded staff reviews your file. We are seeing thousands of seniors get hit with overpayment notices for rules they didn't even know had changed. I have just finished breaking down the new substantial gainful activity limits and the high-risk clawback zones that were quietly added to the 2026 technical bulletins. I'm going to show you exactly how to navigate this new digital minefield, the one hidden form you must file to protect your VA disability pay, and why being on the list for the 1,560 senior tax break could actually put your SSI at risk if you don't report it correctly. If you want to shield your monthly check from these new automated sweeps and ensure your benefits aren't the next ones to be frozen, hit that like button right now, and let's get into the truth about the 2026 benefit changes. Now that the 2026 COLA has officially landed, we have to look at the net effect of these changes, because the raw numbers on your annual benefit letter only tell half the story. You see, while a 2.8% increase sounds like a win on paper, the reality of the 2026 benefit squeeze is much more complex than a simple cost of living adjustment. For the average retired worker, that boost translates to about $56 more per month, bringing the median check to approximately $2,071. But for the nearly 8 million Americans on Supplemental Security Income, or SSI, the margin for error has become razor thin. The new federal payment standard has climbed to $994 for individuals and $1,191 for couples. Yet the IRS and the Social Security Administration have simultaneously activated a high-velocity data-sharing bridge. This means that every single dollar of in-kind support, like a family member helping with your rent or a small gift of cash, is now being flagged by AI-driven scanners that are plugged directly into state-level social services databases in real time. This is the one big beautiful bill reality. More money is flowing into the system, but the gatekeepers have been given high-tech teeth to ensure not a single penny is mismanaged. If you are receiving concurrent benefits, meaning you get both SSDI and a small SSI supplement, the new 2026 verification protocols are looking for any unreported changes in your resources. The asset limit for SSI remains frozen at a strict $2,000 for individuals, despite the record inflation we've seen. In this high-tech environment, the SSA's new master computer is scanning for excess resources in digital wallets and peer-to-peer payment apps. If that system sees your balance tick over that limit for even 24 hours, it can trigger an automated overpayment notice that demands thousands of dollars back or stops your check entirely. The machine doesn't care that you were just saving up for a car repair or a dental procedure. It only sees a binary violation of the asset ceiling. For our veterans, the stakes are equally high. The Department of Veterans Affairs has just updated the maximum annual pension rate, MAPR limits, and the new 2026 ceiling for a single veteran without dependents is sitting at $17,441. But here is the catch. The VA is now utilizing a 3-year look-back period for asset transfers that is being enforced with a level of digital rigor we've never seen. If you have moved money to children or into a trust to qualify for the aid and attendance enhancement, which can boost your pension significantly to help with the rising cost of home care, the VA's new automated audit system is scanning property records and bank transfers to catch divestment strategies. They are giving with one hand, increasing the aid and attendance maximums, but they are using the other hand to tighten the net worth trap, which is now capped at $163,699. If you exceed that number by even $1 because of a home value reassessment, the system is programmed to flag your file for an immediate eligibility review. We also have to address the Social Security Fairness Act update, which is a massive victory for firefighters, police officers, and teachers, but a potential headache for the administrative systems. The repeal of the Windfall Elimination Provision, WEP, and the Government Pension Offset, GPO, means that millions of retired public servants are finally seeing their earned Social Security benefits restored. For some, this is a monthly increase of up to $587. However, the IRS and the SSA are struggling to sync these restored payments with the new 2026 tax brackets. If your benefit jumps because of this repeal, you might suddenly find yourself pushed into a higher modified adjusted gross income, MAGI tier, which could claw back the new $6,000 senior tax deduction that was the centerpiece of the 2026 tax relief plan. It is a classic case of the government's right hand not talking to the left, and you are the one who has to manage the fallout. This brings us to the Medicare Part B premium trap. The standard monthly premium has surged to $202.90 for 2026, a nearly 10% increase that is catching many off guard. Because this is usually deducted directly from your Social Security or SSDI check, the real increase for most people isn't $56. It is closer to $26 once you factor in the rising cost of outpatient care coverage. If you are a disabled worker on SSDI, the new Substantial Gainful Activity (SGA) limit has risen to $1,690 a month, or $2,830 if you are blind. This is designed to give you more room to work and earn. But with the new AI scanners watching your payroll data in real time, the trial work period has become a digital minefield. If you earn $1 over the new $1,210 trial work threshold for 9 months, the system automatically begins the process of transitioning you off benefits. In the past, you could fix these issues with a phone call. In 2026, you are fighting a computer algorithm that doesn't understand nuance or one-time errors. The IRS has also confirmed that they are now receiving direct data feeds from the VA regarding fiduciary appointments. If the VA determines you need a fiduciary to manage your pension because of a health condition, that data is instantly shared with the Social Security Administration. This can trigger a representative payee review for your SSI or SSDI, which often freezes your payments until a new interview is conducted. With the current staffing shortages at local offices, these reviews are taking months to complete, leaving vulnerable seniors without access to their funds during the most critical times of the year. The system is designed to protect you from fraud, but the unintended consequence is a bureaucratic bottleneck that targets the very people it was meant to help. If you are a pensioner who also receives a private retirement check, you need to be aware of the new 1099-R reporting surge. The IRS has mandated that all private pension funds use a new electronic reporting format for 2026 that includes real-time distribution alerts. This means the SSA knows about your private pension payout almost the same day you do. If you haven't updated your estimated earnings or other income reports with the Social Security Administration, the automated matching system will flag you for an unreported income discrepancy. This is the #1 reason for benefit suspensions so far in the 2026 season. They are no longer waiting for the end of the year to settle the books. They are balancing the ledger every single month. We are also seeing a major change in how survivors' benefits are processed. The VA has announced a higher of the two rule where they will automatically pay the higher of dependency and indemnity compensation, DIC, or survivor's pension without delaying the process. This is a rare win for efficiency, but it only works if your survivor profile is updated in the new Vet Check portal. If your records are still paper-based, you are looking at a 6-month backlog while the digital filers get paid in weeks. The message from the 2026 administration is clear: go digital or get left behind. This is why having an active My Social Security account is no longer just a convenience. It is a defensive necessity to ensure you can see what the machine is saying about you before it stops your check. The reality of the 2026 filing season is that the IRS has been given a double mandate. They have been told to issue these massive new refunds and COLA increases as quickly as possible to stimulate the economy, but they have also been told to use every piece of technology at their disposal to eliminate fraud. This creates a high-pressure environment for both the agency and the taxpayer. You are dealing with a system that is faster than ever, but also more unforgiving than ever. One wrong digit in a routing number or one missing 1099 form can trigger a cascade of automated delays that could last for months. You have to approach your 2026 paperwork with the precision of a surgeon. Double-check your bank info. Verify your income sources against the transcripts available on the IRS website, and make sure you are claiming every new credit you are entitled to under the One Big Beautiful Bill. As the Today drop continues and more seniors see their balances increase, we have to keep a close eye on the Where's My Refund tool. The IRS has updated this tool for 2026 to provide more specific status codes that go beyond just processing. If you see a code that mentions Topic 151 or Topic 152, it means your return is in the standard processing lane. But if you see a request for identity verification, do not wait for a letter in the mail. You should immediately check your IRS online account to see if you can resolve the issue digitally. The faster you respond to the machine, the faster the machine releases your money. We are in a new era of interactive benefit management, where you have to be as responsive as the government's own AI. Another critical point for seniors to remember is the change to Qualified Charitable Distributions, or QCDs. If you are over age 71, you can still move up to $108,000 directly from your IRA to a charity without it ever touching your taxable income. In 2026, this is more important than ever because it helps you stay below those $75,000 and $150,000 MAGI limits for the new senior deduction. If you take the money as a regular distribution first and then donate it, it counts toward your MAGI and could claw back your $6,000 senior benefit. But if you do a QCD, that money stays off the books for the phase-out calculation. It is a sophisticated strategy that can save you thousands, but it requires you to act before you take your required minimum distributions for the year. The landscape is moving fast, and the 2026 rules are designed to be self-executing, which is great when they work, but a nightmare when they flag an error. For everyone on SSI SSDI or a VA pension in 2026, the manual review era is officially dead. You are being managed by a high-speed digital ledger that rewards perfect data and punishes even the smallest inconsistency. The $1,560 savings we talked about from the new senior deduction is available, but only if your countable income is reported exactly as the machine expects it. You have to be proactive. Check your online accounts every month. Verify that your VA disability rating is correctly reflected in your SSA file. And most importantly, if you receive a notice, even if it looks like a routine update, do not ignore it. In 2026, a routine update is often the first step in a verification freeze. I am going to keep monitoring the overpayment notice trends and the latest technical bulletins to see if there are any new loopholes or protections being added to the One Big Beautiful Bill. For now, your best defense is a perfect digital record. Gather your 1099s, double-check your asset totals, and make sure your direct deposit is locked in. The 2026 season is about more than just a check. It's about navigating a system that is faster and more scrutinized than ever before. Stay diligent, keep your records machine-ready, and let's make sure you get every penny of the benefits you've earned and paid into over a lifetime of hard work. As we wrap up this deep dive into the 2026 rule changes, it's clear that the Today drop isn't just about a single payment. It's about a fundamental shift in how the government manages your monthly survival. The IRS and the Social Security Administration have effectively flipped the switch on a new era of digital enforcement, and for the seniors and veterans who have made the list, the potential for increased benefits has never been higher. But as we have seen throughout this entire breakdown, the burden of accuracy has shifted entirely onto your shoulders. The machine is watching every asset transfer, every dollar of modified adjusted gross income, and every VA disability rating with a level of precision that makes the old paper and pencil days feel like ancient history. You have the tools and the knowledge now to navigate this new landscape. You know that the One Big Beautiful Bill has given you a massive $6,000 bonus deduction, but you also know that the new 1099-R real-time reporting and the Medicare Part B premium trap are the silent variables that could change your math overnight. You understand that paper checks are officially a liability and that your proactive response to IRS and SSA digital notices is the only way to avoid the manual review black hole that is currently swallowing up millions of files. This is your financial life, and in 2026, being close enough is no longer an option. You have to be exact, you have to be digital, and you have to be your own best advocate. We are going to be right here with you throughout the rest of this year, monitoring the "Where's My Refund" patterns, tracking the new benefit freeze surges, and breaking down every technical bulletin that comes out of Washington. The 2026 rules are complex, but they are also filled with more opportunities for savings and restored benefits, like the WEP GPO repeal, than we have seen in decades. If you take the steps we've outlined, verifying your digital identity, checking your asset totals, and monitoring your My Social Security account today, you are putting yourself in the best possible position to secure your future. Don't let the noise of the new laws keep you from what you're owed. Use the new portals, keep your records machine ready, and make sure your direct deposit is locked in. The 2026 stealth stimulus effect is real, but it only works for those who know how to play by the new rules. Stay diligent, stay informed, and keep a close watch on your accounts as these historic changes continue to roll out across the country. We'll see you in the next update as we uncover even more ways to protect your wallet and maximize your benefits in this high-tech era of federal finance.